The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, on Thursday's trade, it was a bit of a boost for beans as we saw soybeans and soybean oil, the upside leader on a mostly positive trading day. Was it some of the news about the details of that US EU trade framework that mentioned soybean oil and other ag products? Is it just a general bounce in the market trade as we near the end of the week? Let's talk about all that and more. Joining us for market analysis and perspective today, Brian Doherty, Senior Market Advisor with Total Farm Marketing. Brian, hope you're having a great week. Glad to have you back with us here today. And let's start with soybeans. That was the big winner on Thursday's session. Your thoughts as you looked at the market trade overall?
Yeah, so a number of things that you could maybe point to and say, well, why was the market up today? Well, when you look at soybean oil, big gains to date. So that market has been kind of on a slippery slope as of late. Really nice big upturn here. I'm just going to take a quick peek. I want to see if today's low was lower than yesterday. Not quite, but big up there. I was looking for a reversal. Technically a reversal, bullish key reversal. You need the market to trade lower than the previous day. It traded within a couple cents of yesterday's low. Nonetheless, big upturn there. Lots of talk. Maybe the EU is part of that, but I think there's a lot of speculation about exemptions that could come from the Trump administration on smaller refineries. What does that look like or doesn't look like? And if there are exemptions, do the larger refineries need to pick up that volume differential? So a lot of kind of smoke today. Maybe there's some fire there in the soybean oil. You've got that. You've got a bit of a technical bounce. You've got good numbers coming out of the Pro Farmer Tour. So, one person's opinion, that's me, I would look at the numbers and go, well, it's confirming a big crop, right? It looks pretty doggone good. There's spots, but there's other things sort of creeping. There's been a lot of rain lately and talk of potential white mold situations, maybe some rust. Again, the market kind of tried to push lower here recently and just ran out of selling interest. So you get a really good punch today, and it's still a range bound market, but a real nice technical breakout in November beans today. There's a pennant formation on the chart, and it took out the previous high from the 14th. So the market pushed higher, and all of a sudden, November beans are trading at their highest point since the first week of July, starting to look impressive. Something's going on. Maybe the idea that the USDA was to report, Jesse. Remember, I think we talked about this last week, where wow, that the crop's kind of backed into a corner. Better yield at that high level. Otherwise, with 290 million bushels of carryout, you peel a bushel or a bushel and a half or 2 bushels off a yield, and this carryout gets really thin really quick. And that there might be some people trying to second guess whether that yield number can reach the USDA's objective.
With soybeans, I think there's a little bit of an interesting dilemma maybe coming here for some producers. When you think about it from a cash market perspective, I know some areas basis is not looking very good. I've heard talk in the Western Dakotas, for instance, you got basis with an 8 in front of it or a low 9, and some of the river basis has changed, but yet you see a 1056 close and no beans on the board Thursday. And so that makes me wonder as a producer, should I be looking at all the tools in the toolbox to maybe manage my risk here now that we're getting a little bit of a bounce in the bean trade this week?
Right. So you look at this and you go, okay, especially if you're in the West. Let's take your example. Terrible basis, right? So you don't want to do a forward contract, right? Most likely, if the board drops, cash isn't going to drop as quick, or it could actually rally because nobody's still selling the cheap cash price, right? So if there's some export activity that develops in the Northwest, where China comes in and buy that type of thing, you could really see some nice basis improvement. Right now, that area of the country is really a dog. I would, if somebody said to me right now, how would you approach this market and defend it? I would say just look at the put option market or fence strategies: buy, put, sell, call. That has risk associated with on the call sell. So don't do that without talking to your advisor and understanding those risks and the immediacy of margin call. But when the market balloons up a little bit like this, you get some nice premiums starting to come back in those options that if prices can't continue to go higher, that can drift away kind of quickly, and you look back and go, oh, those calls, people spent a lot of money for them, and they're not worth as much. And you as the seller are looking to either collect that premium and or collect that premium and willing to take a hedge at that high strike price. So I'd almost view it as a win-win. But it's been a good rally. Gosh, you look at this bean market here, first of the month, really looked kind of sick, down to 981, all of a sudden 1056. That is a really nice 75-cent rally, um, and closing at its highest price since early in the week. Export sales on new crop, we would be remiss if we didn't mention those. I think they're off to a good start for the soybeans. Not, I wouldn't call stellar. Corn's off to a stellar start, but
Hmm.
beans off to a good start for the new marketing year. Year to date, I show that corn, I'll start with that, 657 million bushels. If I did the math right, Jesse, that's 22% of the projected export sales for the year. The year hasn't started yet. It starts September
Hmm.
1st, so really, really nice start. Soybeans 215 million, nice start there. It's about a third of the corn, so it's getting there, but it's not quite in the same ballpark.
On the corn side, let's go over there and talk a bit. It was a positive day Thursday as well. I think maybe futures got some spillover support from soybeans to some degree, but you know, the prospect of big crops out there, obviously. I'm curious though, from a technical perspective, we closed at 411 and three quarters in D's corn, and I think a few folks were watching maybe this 410 level if we could get back above that. I mean, your thoughts technically in corn here. Are we finding a little bit of positivity finally, possibly, maybe here, Brian?
Finally, possibly, maybe. um, there's a big crop out there, right? And it's coming. So that's the reality. The question is, when you have expectations for a big crop, and maybe they don't quite meet those expectations, let's kind of look at what happened. The WASDE report comes out, billion bushels more in production, but 550 million more in demand. Wow. Lower farm gate price, 30 cents. Okay, so the USDA must be figuring that a 30-cent drop in farm price is going to create about 550 million bushels of demand. The point I'm going to make here is that when you put that demand into the market, the USDA can take it out, and usually probably does. And if prices trend higher, and then they use a formula that likely will say quantity demanded is a little less when prices rally. That's kind of a basic economic law. As far as the big picture perspective, though, you had this WASDE report, added a billion bushels of production, added 550 million bushels of demand, so it's a spread of 450 million. Well, what if the yield? And I think the Pro Farmer Tour report is kind of angling toward, what if the yield's really about 183 or 184 national average? Well, now with this extra demand pushed into the market, if the market sees a drop from 188 to, let's say, 184, 4 bushels an acre, let's do simple math, times 90 million harvested acres, 360 million. We'll tack that on the 550. That's 910 million. You're talking a 90 million bushel spread on the carryout number from the report in those numbers. That's why I think the market had a tough time going down after the report. We're down 13 the day of the report, then bounced back. Last week finished a quarter cent lower for the week. Wow. I think end users maybe sort of woke up a little bit, but I think the speculative interest said, let's be careful how short we want to be caught down here. Crop's not, crop's not in the bin yet.
Well, and thinking of that crop getting in the bin, and I know we've touched on this a bit, a lot of producers are looking really hard at storing as much as possible this harvest and really only moving to town the bushels that they have to. And so one has to wonder here how this all plays out over the next several months. And as those combines roll and we get more confirmations of what's actually out there. But I think, again, here, kind of the same with soybeans and corn, folks just need to be on their toes and sharpen their pencil as best as they can in this corn market, Brian.
Yeah, and unfortunately, for some, they'll look at this and go, well, we really don't need a rally right now, right? Because if they got an average yield and they've got a higher insurance rate, they kind of want to collect that indemnity, right? So the market can rally and won't mean a lot to them. That being said, there's a lot of farmers that have a really high yield, so that'll pull down their indemnity price or level. So just a lot of variables out there, things to think about from a marketing perspective. If prices drop back, does a farmer spend some money on call options to defend insurance indemnity? Maybe, maybe not. Maybe buy the futures. But those are all discussions to have with your advisor, and you're measuring your risk tolerances. I think big picture, we just need to step back and recognize two things. One, it's a really big crop, but two, corn priced where it's at is a really good value. And I think the jump in export activity is already uh, suggesting that, right? There's recognition that corn at, if I'm a importer and December corn's at $4, I'm buying corn. If December corn goes to 350, I'm buying more corn. The point of it's a win-win. You're buying cheap and you're buying cheaper. So there's not a lot of risk to own the product down there from a user perspective.
Brian Doherty, Senior Market Advisor at Total Farm Marketing, is our guest analyst here today. Brian, we got a couple minutes here. I want to talk livestock. Cattle futures finally had a mixed day on Thursday after really futures just being strapped to a rocket so far throughout the week. Monday, Tuesday, Wednesday trade, and then Thursday a little more mixed. But again, I think it comes back to, here we go, more volatility continuing in this cattle complex, Brian.
More volatility, more news coming. Cattle on feed tomorrow afternoon. I think just in a high flyover summary, it's going to confirm a tight supply. I don't know why anything would vary from that trend. And if we are, and maybe part of this push higher in cattle is if the herd is being built and there's some heifers being retained, maybe one of the reasons why, we hear packers are short bought. Packers can't find. They're taking lighter animals. But the head scratcher is when you look at the way cattle have moved as of late, the last 6 weeks. And my argument is if you study markets historically, they do have a tendency sometimes to sort of accelerate as they get toward the top end. And if you look at about a $30 rally in October cattle in a short period of time, that equates to about a 16% change or increase in value of live cattle in about a 6-week window. So think about that in retrospect. What else goes up 16% in 6 weeks? The only thing I can think of is something that is a supply shock. Well, there's no real supply shock here. It's just this kind of continuous tight demand. When I say supply shock in a 6-week window, you could have a drought in the corn market. That's when things move that fast. In 2012, corn in less than 90 days rallied over $3 because of drought conditions. That's a big change, right? So there's no supply shock there to what I would call to speak of. So to speak to that, it's a market that seemingly continues to find demand. I don't know. It feels like a market to me it goes up and then it's going to run out of air and come down. Use puts in that market. I've been staying away from futures for some time.
I know we have to wrap up and let you go a little early here today. Any other final thoughts? I know we didn't get to hogs and dairy. Anything else you would mention for folks today?
Well, just a flyover on there. Dairy got a milk production report out a little bit later. That'll probably have a confirmation of bigger supply. The market responded, I think, an expectation on that today, down 20 to 30. I guess I would start with this. Marketing never takes a day off, okay? So the message is stay on top of things, stay with good conversations, stay consistent. Things change. If you would have asked me, prior to the WASDE report, can we in fact see corn trading where it is today, which is December corn as high as almost 414? After a 400 million bushel increase to carry out, I'd say that's crazy, but it's happened. So now what do we do with it? So stay on top of it, stay in touch with your advisor, make sure that you're staying in front of these markets.
And I know folks can reach out to you for a conversation with a phone call, 800-334-9779. They can also learn more at totalfarmmarketing.com. Brian Doherty, Senior Market Advisor, Total Farm Marketing. Glad to have you with us again this week. Have a great weekend, and we'll talk to you again soon.
Jesse, as always, my pleasure, and thank you very much for the opportunity.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.